So although I'm making this video a bit late, but it does not matter as the impact of interest rate decrease or increase won't happen in a day or even in a week. A few days back, Federal Reserve Bank in the US has cut interest rate and the banks all over the UAE have been proactively cutting their own offered profit rates. So I received this email from Bank which informed me on 31st of August that they are reducing the rates from 5% to 4.25% on regular savings space. While the Fed announced this on 18th of September, so you can imagine they have already announced 18 days prior to the announcement. So this is the same what has happened with other financial institutes as well. BO is not the only platform who has acted proactively. In fact, all the financial institutes which provide fixed income opportunities have changed their offerings. If you talk about UAE national bonds or any other bank who has fixed income products, be it Sharia compliant or they have conventional options, they all were impacted. Moreover, as dirham and USD are pegged with each other, any profit or interest rates offered in the UAE always move in tandem to whatever the policy is taken by the Fed in the US. Now let's talk about how it's going to impact a common man and talk about some benefits to you as a consumer. A regular consumer will get benefit on low mortgage, low credit card interest, low car payments, and low personal loan, and so on and so forth. There are many other benefits that the regular consumer will have once the interest rates are cut. In short, as a consumer, it's much easier for you to borrow money to spend on whatever you want. This sometimes have a direct impact on inflation as well, as this is one of the reason we had record inflation in last few years when the interest rates were low. Let's not delve deep into this direction as there are multiple other factors involved. In this video, I would like to talk about more people who have been enjoying these high interest rates and avoiding riskier investing avenues in the hope that the party will keep on going. Now, this is where educating yourself with investing is very important. In such times where interest rates are low, the guaranteed income opportunities die up, just like Bank. Bank has reduced the interest rates from 6%. A few months back it was 6% and now it's 4.25%. You never know, the next step might be 3.5%, and based on whatever Fed announces, they would be of course proactive in reducing their rates. Just 6 months back, everyone was able to invest in fixed securities with very high interest rates of in the range of, let's say, 6%, 7%, or even sometimes at 8%. Now those people will be in a fix, because if they were only reliant on fixed income, they would not be able to invest anymore with such kind of a rate of return. This is where educating yourself with investing is very important. In such times where the interest rates are low, the guaranteed income opportunities would sure dry up. So we should start thinking seriously about asset as opposed to people who are hooked with high interest rate instruments. Assets can be stocks, real estate, and investing on your own self. Now, investing on your own self is very important. I've seen myself that when I started like 4 years back making these videos on YouTube, it has changed my life completely. But let's talk about only intangible investments opportunities, which are stocks, real estate, and fixed income as well. By the way, there is still opportunity for people who want to have low risk investment, because low risk investment is still very important. Let's say if you need some money after 3 years and you don't want to have it invested in stock market or let's say real estate, because of course once you invest in for a short period of time, the market can go down, the real estate can probably not get liquidated, or things can happen. So for that you still need fixed income. So I'll tell you about those fixed income option in towards the end of the video. But let's talk about stocks first. I'll show you one of the chart. This is very interesting, and once you see this, you will have an idea that why it's important in investing in the stocks in low rate environment. From 1929 until July 2019, we've got a lot of instances where the interest rates have been cut down, and this chart is showing you S&P 500 return for the 12 months after the rate cut. In 2019, after the 12 months, the return on the S&P 500 was 3.3%. Similarly, in February 1954, the return once the interest rates were cut was 35%, and so on and so forth. Only two instances were there in January 2001 and September 2007, the Great Recession, when we saw that the cut of interest rate still did not increase the returns in the next 12 months. So Although I would say this is still not something which you should be banking on, and you should be taking this data with the pinch of salt. But still, this is something which is available, and this data shows you that the lower interest rates will give you a boost in the stock market. Again, it's not an investment advice, but it's just the data points that I wanted to share. For the stock market, there are options in ETFs, the individual stocks, as well as there are some robo investment platforms. If you're watching me from the GCC countries, there are options like Sarva, there are platforms like Baraka, and also a universal platform like Interactive Broker that you can open the account and start investing. Platforms like Sarva and Baraka, they are very easy to go, easy to use platform. The reason is that they are based in the UAE, and once you are funding the account, the support is also here. So it's easier for you to talk to them to get some support. But a good platform which is Interactive Broker, that is based in the US, once you want to, let's say, get into support with them, you have to call them, you have to have some kind of email correspondence, which is having friction. So if you are starting up, I would suggest you to have some kind of broker like Sarva or Baraka. But if you are having good enough experience, then you can go ahead with the Interactive Broker as well. Now with Sarva or Baraka, you have ETFs and individual stocks as well, where you can invest. I won't recommend anyone who is starting up to go for individual stocks, because it's very difficult to pick individual stocks once you don't have enough knowledge. ETFs are easy. They are basically broad market collection of the stocks itself. There are different ETFs that there are available that you can invest in. There is VOO, VTI, and these kind of stock ETF stocks that are tracking the whole market. There is another option which is a robo investor platform. This is offered by brokers like Sarva. I won't say broker. Sarva is not a broker. Sarva is basically a platform. Sarva is using at the back end. There are some other brokers for them to use. You can tell them your risk profile. You can tell them that, okay, I'm gonna invest in low risk options, which of course will have a lower return as well, or you can tell them that you have higher risk appetite and you can have higher return as well there. Again, this is not an investment advice, but you have to think about yourself how you're investing. I would suggest everyone who is investing in Sarva to go for higher risk. The reason is that for myself, whatever investment I'm doing, it's on a smaller level, or let's say it's not the big percentage of my net worth, so I can take more risk while investing in Sarva. Similarly, Baraka doesn't have any robo investor platform, but they have an option to invest in ETFs and into individual stocks. Then comes Interactive Broker. They also have the similar kind of opportunities, but at the same time they have an ETF which can give you the opportunity to invest and get tax benefit. Because whenever you are investing in ETFs or stocks from the UAE, or being a non-US citizen, you will always be slapped with 30% of dividend tax. Let's say if you've invested $100 and you've got $3 of dividends, those $3 would be slapped with the 30% tax on dividend. But there is an option in Interactive Broker that if you buy Irish domiciled ETF, you would only be taxed on 15%. But again, as I said, Interactive Broker is a bit difficult, and also it has more complications while you're opening the account, while you're transferring the money, while you're investing in it. If you want, I can make another video about Interactive Broker only. You have to let me know in the comments. So for Baraka and Sarva, if you want to open the account, you can use my referral code, which is linked in the description below, and you can get $50 for Sarva and up to $25 for Baraka once you start trading with those platforms. The terms and conditions are mentioned in the description of this video. Now, before I go to the next section, which is real estate, I just wanted to touch upon REITs, because you can buy REITs while you are in your brokerage platform like Sarva, Baraka, or Interactive Broker. REITs are basically real estate investment trust, where they are listed on the stock market, and you can buy them and trade them day in, day out on the stock market. Although I don't recommend day trading anyways, but just to let you know that you can do this. Now, REITs are specifically good because then you have a real estate exposure, not by investing in direct real estate. So I invest through Baraka in Realty Income, which is a good REIT. Again, it's not an investment advice from my end, but it's almost having 5% of dividend returns. On top of that, there is a price appreciation which I've seen from 45 to $62. Although during 2017 the same REIT was almost around $70. So it all depends on you. If you want to go ahead with investing, you should go. Otherwise, you should stick with a simple index fund. Now comes the actual real estate that you can buy. If you're in Dubai, you can buy through cash, you can buy through mortgage, you can buy through let's say off-plan properties. So there are many other options to invest in Dubai real estate. Once you plan to buy a property, it comes at a higher cost. Even if you're going for a mortgage, at least you have to go for 20% down payment. So 1 million dirham property would at least require you to have 200,000 dirhams, and then on top of that you might need the property acquisition cost, which is around 7% nowadays. The second option is the fractional ownership. I invest through Stake and Smart Crowd for the fractional ownership in UAE properties. These are very good platforms. They are regulated platforms. They've got transparent set of rules that you can always see on their websites. So what happens is that they've got some properties listed on their website, and whatever amount you want to invest in, let's say 1000 dirhams, 2000 dirhams, 5000 dirhams, 10,000 dirhams, or even 100,000 dirhams you want to invest in, you can just go there, fund your wallet through your bank card, or let's say your card, not credit card but debit card. If you're not in the UAE, still you can invest through funds transfer. These platforms actually are really secure because they are regulated by the competent authority here in the UAE. They have SPVs that they create for each property. If you want to see your own name against your SPV, then you can go to the DIFC public register and you will find out that your name is there. So that is why I'm really comfortable investing in these platforms. If you want to invest, you can use my referral code, which is linked in the description below, to get 200 or 250 dirhams of referral bonus whenever you start investing in these platforms. Now, as I said before, that I want to discuss about fixed income, which is still giving you some kind of return, because sometimes you want to invest in short term, let's say 3 years, 4 years. Let's say you want to pay for your children education, or let's say you want to buy a house, and for that you want to save some money for the next 2-3 years. That money cannot be invested in the stock market or even the real estate, because then that money can have some short term deviation and the funds can go down. You can have negative returns. So that is important to be invested in the fixed income. The fixed income opportunity that I will be telling you is basically you can maximize your return based on the length of investment that you're doing. So even for the Review Bank, the 1 year lock-in period, if you go for the 1 year lock-in period, you will get almost 4.5 or 5% return. I'll mention on the screen. But if you go for the shorter period, or let's say the savings account, that is giving you 4.25%. So depending on your situation, whenever you want the funds, you can invest accordingly. So there are different banks, there are different platforms that are offering you different rates for 1 year, 2 years, let's say 1 month, 3 years, 5 years even. So based on your needs, based on your final outcome, based on whatever your goals are, you can invest on whatever tenure that you're looking for. I make videos about personal finance, I make videos about productivity, I do podcasts as well. Recent podcasts that I've done about side incomes, almost 10 of them I've discussed with one of my friend Behrouz. The link of this video is here. There is another podcast that I've done with Ali Irani. He's the moderator of a very famous group here in the UAE about personal finance. Here is the video. Do let me know how did you like this video. Thanks a lot.